welcome back to Market Brief After Hours. It is great to have you with us as we wrap up what has been, frankly, a roller coaster of a week. And today we have a lot of noise to filter through.
We certainly do. It was a volatile Friday session that really had a bit of everything: legal drama, geopolitical tension, and some confusing economic data. But ultimately, we saw U.S. equities close higher.
That's right. It feels like the narrative shifted halfway through the day. We started with some pretty gloomy economic numbers, but then the Supreme Court stepped in. Let's start with the big picture numbers. How did the major indices finish up?
So despite the early weakness, we saw a broad recovery. The Dow Jones Industrial Average managed to reverse a 200-point decline to close up 231 points, rounding to the nearest whole number there, or 0.47%, finishing at 49,626.
A solid turnaround. And the S&P?
The S&P 500 did even better percentage-wise. It advanced 0.69% to close at 6,910. And leading the pack was the tech-heavy Nasdaq Composite, which climbed 0.9% to finish at 22,886.
So the Nasdaq is back to winning ways, snapping that 5-week losing streak.
Exactly. It rose 1.5% for the week. But the catalyst here wasn't just earnings or tech optimism, it was legal clarity. The Supreme Court issued a major ruling regarding trade policy.
Let's dive into that. This was the ruling blocking President Trump's emergency tariffs, correct?
That's the one. The court ruled that the International Emergency Economic Powers Act does not authorize the president to impose these specific tariffs. This was a huge relief for the market. Investors immediately started pricing in reduced input costs for corporations and hopefully an easing of those tariff-driven price pressures we've been dealing with.
Which explains why we saw the S&P 500 and Nasdaq pop. But it wasn't all clear skies, was it? The administration didn't just take this lying down.
Not at all. Almost immediately, President Trump announced plans for a new 10% global tariff. So while the emergency tariffs are out, we have a new layer of uncertainty. That's why the sentiment remained measured rather than euphoric. Investors are now trying to figure out if this new 10% levy will stick and what the economic fallout looks like.
Speaking of economic fallout, we can't ignore the macro data released Friday. It wasn't pretty.
It really wasn't. Fourth quarter GDP came in at an annualized rate of just 1.4%. That is a sharp miss compared to the 2.5% economists were expecting, and way down from the 4.4% we saw in the third quarter. The Commerce Department noted that the government shutdown shaved about a percentage point off that growth.
So growth is slowing significantly. What about inflation?
That's the tricky part. We are seeing slowing growth, but inflation is sticky. Core PCE held steady at 3% in December, and headline PCE actually accelerated to 2.9%. Both measures rose 0.4% month-on-month. So the Federal Reserve is in a tough spot. Growth is cooling, but price pressures aren't going away.
A classic rock and a hard place scenario. Now, while the U.S. was navigating this, Europe seemed to be having a party.
They really were. European markets rallied across the board, taking a cue from that Supreme Court ruling. The Pan-European Stoxx 600 ended up 0.8%.
Run us through the major country indices.
Sure. In the UK, the FTSE 100 climbed more than 0.5% to hit a record close of 10,687. Over in France, the CAC 40 rose 1.35% to 8,512. Germany's DAX gained 0.79% to close at 25,242, and Italy's FTSE MIB surged 1.46% to 46,462.
Impressive numbers, especially for Italy. Was there any local data driving this, or was it purely sentiment spilling over from the U.S.?
There were some good local drivers. UK retail sales volumes were up 1.8% year-on-year in January 2026, which blew expectations out of the water. Plus, the UK posted a record public sector surplus. In Germany, producer prices fell 3% thanks to dropping energy costs, which is great for their industrial sector.
Moving east, Asia seemed a bit more mixed.
Definitely mixed. Japan struggled a bit. The Nikkei 225 fell 1.12% to 56,826. But the standout was South Korea. The Kospi closed 2.31% higher at 5,809, hitting a second consecutive record.
What was fueling Korea?
Semiconductors and defense. SK Hynix gained over 6%, and Hanwha Aerospace surged over 8%. Conversely, Hong Kong's Hang Seng slipped almost 1%, weighed down by tech stocks.
It's fascinating to see that divergence.
We are going to take a very short break to hear from our sponsors, but when we come back, we are going to get technical with Forex moving averages, look at a massive surge in precious metals, and discuss why some cybersecurity stocks are crashing. Stay with us. Welcome back to Market Brief After Hours. Before the break, we looked at the equities markets. Now, let's shift gears to currencies. It's been a busy week for Forex traders, and I know you have some technical levels for us. Let's start with the euro against the dollar.
Right, Euro USD. It stabilized, closing at 1.1777, up about 0.11%. The key here is the moving averages. The pair ended the session just marginally above the 50-day simple moving average, which sits at 1.1772.
So it's using that 50-day line as support.
Exactly. It confirms that area as near-term support. The pair is also well above the 100-day SMA at 1.1689 and the 200-day SMA at 1.1648. This tells us the medium-term structure is still constructive, even if momentum has cooled a bit since the early February peak. Immediate resistance is at 1.1808.
What about the British pound, GBP USD?
The cable is trading sideways. It closed at 1.3490, up 0.19%. Unlike the euro, the pound is currently trading below its 50-day SMA, which is at 1.3527. That line is acting as a ceiling right now.
But is the longer-term trend still intact?
It seems so. It's holding above the 200-day SMA at 1.3444, which is critical for stabilizing the structure. If we see selling pressure, the 100-day SMA at 1.3394 is the next line of defense.
And finally, for the majors, the Aussie dollar.
AUD USD had a decent recovery, up 0.41% to settle at 0.7083. This one looks technically strong. Price is well above the 50-day SMA at 0.6831, the 100-day at 0.6683, and the 200-day at 0.6602. All those averages are sloping higher, confirming the uptrend is intact despite some recent consolidation.
Thanks for that deep dive. Now, I have to ask about commodities because looking at my screen, gold and silver went parabolic.
They absolutely did. Gold surged back above the $5,000 mark. It closed at $5,095, up 1.88%. It's firmly above all its key moving averages. The 50-day is way down at 46.82. This was a decisive move by buyers to reclaim psychological levels.
And silver?
Silver was even more explosive. It closed at $84.51, up a massive 7.61%. It reclaimed its 50-day SMA at $80.73 in a single session. This kind of move signals strong buying pressure, likely driven by that mix of inflation fears and geopolitical risk we mentioned earlier.
Speaking of individual movers, let's look at the stock market winners and losers. We saw some dramatic moves in the cybersecurity space, and not in a good way.
No, it was a rough day for cyber stocks. Cloudflare fell more than 8%, and CrowdStrike dropped over 7%. The catalyst here was actually a competitor product launch. Anthropic introduced a new AI-driven security feature.
So investors are worried AI is going to eat their lunch?
That's the fear. The concern is that automated code scanning by AI could disrupt traditional cybersecurity platforms. It wasn't company-specific bad news for CrowdStrike, but rather a sector-wide rotation out of fear of AI disruption.
We also saw a massive collapse in the healthcare sector. Grail cratered.
Cratered is the right word. Shares collapsed around 50%. They announced that a clinical trial for one of their drugs failed to meet its primary endpoint. It didn't show a statistically significant reduction in stage 3-4 cancer. That is a devastating blow for a biotech company.
On the flip side, someone must have made money. RingCentral?
Yes, a bright spot. RingCentral shares jumped more than 32%. They reported fourth-quarter adjusted earnings of $1.18 per share, beating expectations, and issued strong full-year guidance. Investors loved that report.
And briefly, Akamai Technologies?
They slumped 14%. Classic case of weak guidance scaring off investors.
Before we wrap up, we have to touch on the bond market and oil, given the geopolitical backdrop.
Oil prices are holding near 6-month highs. Brent crude settled at $71.76. The market is very focused on the Middle East after President Trump mentioned considering a limited military strike regarding Iran's nuclear program. That geopolitical risk premium is keeping a floor under oil prices.
And that feeds back into the inflation worry, which brings us to bonds.
Correct. The 10-year Treasury yield ticked slightly higher to 4.083%. Bond investors are digesting two things: the sticky inflation data we discussed, and the Supreme Court ruling. The thinking is that if tariffs are blocked, that's less revenue for the government, which could increase the fiscal deficit. That worry weighs on demand for U.S. debt, pushing yields up.
It really was a session where every piece of news, legal, economic, geopolitical, was interconnected.
Absolutely. Friday highlighted a market that is trying to balance improving policy clarity, like the tariff ruling, with persistent macro challenges, like slowing growth and sticky inflation. We have selective risk-taking, but certainly not irrational exuberance.
Well, it sounds like next week is going to be just as critical as traders digest all of this. Thank you to our listeners for tuning in. If you find this useful, please follow Market Brief After Hours on your podcast platform of choice. We'll catch you next time.